Good morning, Saurav. I'm Vivekanan from Ambit Capital. I lead the oil and gas, telecom and media coverage here.
Achha, Vivekanand ji, you must be aware about the crude oil situation, especially due to the West Asia crisis. In past couple of months, it has been very volatile. So somewhere down the line, it also reached over $110 per barrel. With the Brent nearly now rovering around 85 to 95 dollar per barrel, will state-run oil companies hold retail fuel prices or pass on cost prices?
Sure, Saurav, that's a good question. So, what we have seen is the government has tried its level best to insulate consumers from the global vagaries or volatility of the oil prices. But this time, the government didn't have a choice. So, the OMCs took 7.5 rupees retail fuel price increases in May. This came after the call for austerity by the Prime Minister in early May. So I think the government is now on a wait and watch mode, and even the OMCs are doing the same thing because the oil prices are very volatile. So just 3 weeks ago, the oil prices were as low as $70 a barrel because of agreements being signed between US and Iran. But now again, tensions are back. So my view is the government will remain on wait and watch. But if this crisis prolongs for too long, the government or OMCs will be left with no choice but to take further price increases.
Looking at the kind of price increases in the past couple of months, we did see there was a price increase in LPG, petrol, diesel, CNG. It's like people were quite tensed also that what exactly will happen. So, do you expect any sort of changes in the pricing, especially like when it comes to petrol, diesel, and LPG and CNG in the coming time?
Sure, Saurav. I think the crisis was not just on pricing but also availability of fuel. So, if you recollect in March and April when the crisis had just broken out, because India is so dependent on the Strait of Hormuz for supplies of crude oil as well as LPG, the country was facing a crisis of unavailability of cooking fuel, especially segments like commercial and industrial users. They were not able to get LPG. I think the government has handled the crisis well, but it has come with a great cost. So the physical market is behaving differently than the paper Brent contract that is traded and displayed every day on the TV screens. What we see is that the pricing of the physical barrel and the physical landed cost of LPG now is much higher than what is quoted on the screen. So I think the government has taken a big hit. We estimate around 1 lakh crore of hit if this situation continues for the full year, on account of the 10 rupees a litre excise duty reduction that has been effected. So yes, Saurav, you're right that the pricing structure has changed, and that has also constrained the government from perhaps collecting the tax revenue that they were entitled to from this sector.
Now, coming back to the sourcing part, India, you correctly mentioned that India is dependent for its crude on Gulf countries and other countries. Especially India also bought oil from Russia and other countries wherever it could. But the thing is, like, there were some situations where the unavailability was one thing. Apart from that, the government stated that the OMCs are in loss, are having losses. So, do you think that how effectively are Indian refiners mitigating Middle East supply risk and shrinking Russian crude discounts?
Sure. I think the oil marketing companies have taken several rearguard measures, and HPCL, BPCL's chairman and director finance, they were on public conference calls after the June quarter results. Both of them reported losses. So the response has been quite dynamic. So both of these companies said that there was unprecedented coordination among the government and industry stakeholders to ensure that the priority segments, cooking fuel or transport fuel in case of CNG, is available and there are no shortages. So I think supply has been restored, but as far as the damage to the profit and loss statements and balance sheets of these companies go, there is still some room to go. So HPCL came on record and said that they are curtailing their capital investments, capital expenditure, some of which is discretionary, and they are likely to undertake capital expenditure only after this crisis subsides, especially the discretionary one.
Uh, this is the last one. With the situations going on, be it the geopolitical tensions, there are some domestic issues also. Uh, do you think that there would be a change in the pricing of fuel, especially like diesel, petrol, LPG, CNG, commercial LPG? Uh, what and if there is a change, how much do you expect it in this coming quarter and in this fiscal?
I think that's a very tough question. The easy answer is that the commercial LPG as well as industrial fuel pricing is anyway very dynamic. So you get a daily rate as per the movement in crude oil prices. But the retail fuel pricing is a bit more sensitive because the government does not want retail fuel prices to fluctuate on the fuel pump every day. And similarly on the LPG side, because the government only managed to convince many poor households to opt for LPG, which is clean fuel from firewood, which is dirty fuel. I think the government will be reluctant to tinker with the prices of LPG. I think on petrol diesel, we are seeing that the government has started consultation on increasing blending of ethanol with the industry. So that could be a rearguard measure. The other thing that the government is also doing is the government is extending the partnership that BP Global has with ONGC to cover a large part of ONGC's production. So the government's thrust is now to ensure that India is able to have more local hydrocarbon production so that these supply shocks can be managed better. And of course, there is also movement on the energy transition side, ethanol being one of them, and of course, the Delhi EV policy, which tells us that the thrust on infrastructure has increased.
Concluding this conversation, you mentioned about the EV policy and E20. How effective are they, and what's the future of E20 plus the electric cars? And if you look at the kind of the fuel scenario, what exactly is the country situation, to be precise, and what should we expect?
Sure, I think the country has managed this crisis very well in terms of ensuring that there is no unavailability to critical segments of the economy. I think incrementally we will see more focus on biofuel as well. We could have a more participative approach where government might take opinions of consumer groups as well. You could have multiple segments of fuel getting retailed because the E20 fuel is perhaps something that has also led to compatibility issues with older petrol engines. The government is talking about isobutanol blending in diesel as well. And then, of course, sustainable aviation fuel is being spoken about, targets also clearly outlined. So I think the biofuel theme will continue in the country, perhaps in a more consultative manner in the future. As far as EV goes, I think what we saw is there were two schemes, FAME and PM eDrive. I think now with the Delhi EV policy, the focus seems more on the underlying infrastructure, charging, as well as the fleets that have been given explicit targets. I think the policy framework is moving from just blanket targets and concessions on GST as well as road tax waivers to now more thrust on infrastructure so that there is a voluntary pull towards EV. We are already seeing that in the numbers of the passenger car OEM companies.
What about E20? It's like there are several controversies associated with it, especially that fuel is not good for the vehicles. Apart from that, so much impurities and so much of curiosity related with it. Is the fuel okay for vehicles, or means like the production of the E20 apt, or means like you can say the is up to the need that India requires?
Sure, I think there is definitely a lot of media buzz around E20, but what we have seen is several countries across the globe have embraced blending of fuel in varying degrees. So the most advanced example being Brazil, and our government is also, I think, now adopting a more consultative path whereby they are able to balance the interests of the vehicle owners who have legacy investments in the infrastructure. I mean, people who have bought vehicles 5-7 years ago. I think in those cases, the government is also highlighting that there is an impact on the mileage, but even the OEMs are coming out and saying that it is not damaging the engine. I think beyond E20 is where the debate becomes more interesting. You need different set of vehicles. So Maruti Suzuki has launched a flex fuel Wagon R. So I expect there to be more action from the OEM side as well. And the ecosystem doesn't just involve the government setting rules on one side, right? You need the fuel retailing systems to also change, the OEMs to also come up with more flex fuel variants. I think that will happen in a more gradual manner. Even E20 transition was very gradual. It happened over a decade. It's not abrupt. I think it got media attention more recently. But this is not a Congress versus BJP thing either. Both governments wanted to do it. I think only in the last few years, media limelight has increased. My view is that ethanol blending or biofuel is actually something that the globe has experience with and made significant progress in.
I'm talking about the availability.
So I think on the availability side, what is also happening is the procurement mechanisms have evolved over time, and we've moved from 1G, first generation ethanol, to second generation, which takes advantage of waste rather than just processing sugarcane juice. So, which also creates a thrust on the circular economy. I think the government will most likely embrace a more consultative path on E20 and beyond, so that citizens are also taken along. I think the recent political actions show that the government wants to take people along.
Thank you for giving me valuable time and speaking with ANA. It was a pleasure meeting you, sir.
Thank you, Saurav.